Welcome to this edition of Trading Bits and Bytes. I'm Susan Littlefield. Today we're going to focus on what's been going on within this ethanol market. We know it's had some interesting bumps and curves as of late. And Jeff Peterson is joining us. He's with Heartland Farm Partners. And Jeff, let's start out with ethanol production. Are we in the process of maybe finding a bottom in this trade?
You know, it sure feels like it. The way that we're kind of looking at this, Susan, is that we're actually watching very closely what's going on with the gasoline demand. And the gasoline demand looks like it did bottom a couple weeks ago. And what's also interesting to watch on the gasoline demand side is that the stock build was only about 1 million barrels. So as a result of that, that's telling us they're getting their supply and demand on the gasoline side kind of evened out and demand's coming up. And that's the first step to go ahead and get us back to a point where we can see some higher ethanol production. I think we probably have one more week in which ethanol production will be down. You know, we're down this last week compared to a year ago, about 46.3%. Year to date, our usage from the corn side, which is really what we're really concerned about and what that's going to do to price, is down about 3.9%, and USDA has that demand down about 6.1%. But we know if we stay down in these areas very long, we know that we'll have to see some reductions on corn demand down the road for ethanol.
Well, is the ethanol stocks, are we getting kind of close to a peak in that market?
Yeah, it looks like it. We've got a lot of stocks, 27.689 million barrels. That's a record amount of stocks. You know, there for quite a while, the industry was saying the easy space to go into is about 27 million barrels. So we're really into some very tight space situation. We're up about 21.7% over where we were last year at this time. The positive thing we are watching on, are we getting closer on getting a balance between the ethanol production and demand, is that we only probably increased ethanol stocks about a million gallons this week. So that definitely was encouraging. So I think we are getting close to finding a peak on the stock situation on ethanol, Susan.
Are we worried about losing demand, though, for the corn, that is, because of the reduction in ethanol production?
Yeah, we most definitely are. You know, and as we take a look at that April report, when that came out from USDA and their monthly numbers, they took a pretty big swing. They took 350 million bushels out of the overall demand for corn going to ethanol. We think there's additional room there. How much, it's going to be hard to tell. You know, we've went through and broke down month by month what we think the demand is going to be off, and compared to pre-coronavirus versus after the coronavirus. And our numbers would suggest it could be somewhere as high as 659 million bushels. Now, the next time we'll see any revisions on that, Susan, will be in the May report, which will come out during that second week of May. We don't think USDA will lower the ethanol demand on the corn side that much. Maybe they lower it another 100 or 150 because there's a lot of uncertainty on when exactly everybody's going to get back driving. So, but we do know that down the road there will be some less demand on the ethanol side yet for corn.
As you look at this new crop, and as planters are in the field getting it in the ground, how do we keep the emotion out of marketing this year?
This is going to be one of the hardest years for that, because if you think about it, one of the things we've seen many studies done on, Susan, is that people will take way more risk than they should to avoid a loss. And most everybody we talk to is in a loss situation right now. So I think the first step in that is do everything they can to know that they're getting their crop in under good conditions, that they're going to raise a good crop. Secondly, then to start and work through the numbers to be able to get a feeling so that they know where they're sitting on their break even. So they've got that and they know where that number's at. And then thirdly, realize that, they only can do so much, and they just have to be ready to pull the trigger when this market starts working its higher, and not putting a lot of pressure on themselves, meaning if they make a sale and conditions change on the road, have some flexibility in their marketing plan. Talk to someone that can help them understand how to use some calls so that if it does turn hot and dry later on this summer, they can still pick up some more, on a price move. So really have some flexibility in that marketing plan. I think if they practice those steps, that'll help take a lot of the emotion out of it for them.
Some good things to think about as we head into this next marketing week. Thanks, Jeff.
You're welcome.
Jeff Peterson's been joining us today. He's with Heartland Farm Partners, and that's this week's edition of Trading Bits and Bytes. I'm Susan Littlefield.